Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. I hope you guys are having a great week. It is Wednesday here, and it is nice and cloudy. We are going into the cloudy season. I know it's August still, but I'm looking forward to fall. It is my favorite season of the year. So I hope you guys are enjoying your day. It's a good day for a second reason because we have DJ McClure with us here on the show. He is from National Flood Experts, and he's here to talk to us about flood insurance. This is something that a lot of people, in fact, myself included, I will look at properties, and when a property is in a flood zone, I automatically just ignore it. I don't even look at it because flood insurance is insanely expensive, and it makes the numbers not work out a lot of times. So it's going to be an interesting conversation. DJ is also an investor in LP in multiple syndications in 2,500 units. So he has a lot of experience to share. DJ, thanks for hopping on the show.
Oh, thank you. Excited to be here today.
Absolutely. I told you right before we got on here, we always like starting with stories and hearing how people got to where they are. So tell us, how'd you get started in real estate?
Yeah, I mean, I've been with National Flood Experts for 6 years, and I'd had some small experiences, having owned homes before this, and small rentals and such. And so I always knew there was definitely a path to prosperity there. I didn't take the aggressive steps, in my 20s that I wish I had, knowing what I know now at almost 40, right? Everyone kind of has the same hindsight, right? So we work primarily with, investor clients. And so funny enough, right? You absorb all the things in the circles that you're in. And so it just became super contagious. I was working in the medical device world before this for a short stint, realized quickly it was not going to be, a lifelong thing for me. And I started looking elsewhere and found this company. And it was just very particularly interesting in the overlap of industries that it had. I don't have an insurance background. I don't have an engineering background. But the solutions and the problems that they, had created was just very, very attractive. And so here I am all these years later and just hanging out with real estate investors, all the time.
Nice. I love it. So let's talk about flood zones. It is, as I mentioned, it's something that it's one of my criteria that I look at when I underwrite properties. I will generally pass on a deal if it's in a flood zone. Insurance is one of the big reasons for that. Mm-hmm. And so tell us from your perspective, first of all, explain the different types of flood zones. There's 100-year, 500-year. Explain that to people. And then explain the risks that they should really be taking into consideration when they're looking at properties that are in flood zones.
Sure. That's a great starting point. So, years ago, FEMA established these flood zones. The 100-year, 500-year, it's kind of antiquated terms in reality. But, in the 60s and 70s, they were realizing they needed to put some guidelines in place. And so flood maps started being created around the mid-70s. Flood insurance mandates.
It was just in the 70s that flood zones came into play? I did not know that.
Yeah. So if you look at properties that were built, pre-70s in most parts of the country, they didn't have any permitting restrictions or guidelines, specific to elevations that those properties should be built at. Now, there might have been like some common guidelines. I'm not old enough to know firsthand, but, when those flood maps came out, they said, all right, now we have elevations that we've established for these areas. Properties need to be built at some elevation above those. Most parts of the country, even to this day, it's 2 feet over the flood elevation, right? So first floor has to be, 2 feet. And then, some properties have to be put on stilts in order to be able to, meet that restriction. So with the flood maps came flood insurance requirements. And so you've got a federal law that's in place. Anything in a 100-year flood zone, the federal lending programs have to require flood insurance. So it's pretty black and white.
Explain the 100 and 500 again.
Yeah. So a 100-year flood zone is, basically the high risk flood zone. So anything beyond that, don't even really worry about what it's called. You've got the A zones, which is, the most common. You've got your V zones, which are your coastal zones. This is where they expect some kind of wave action or, storm surge potential. Your X zones are your low percentage, um, considered to be in a lesser risk area, right?
Okay.
But interestingly enough, a lot of parts of the country, especially coastal, like down here in Florida, really anything can flood. But in terms of the lenders, it's the A and V zones that they really have this compliance requirement. And so that's where flood insurance restrictions originate from.
Interesting. And the A and V zones, those are all within because I'm only familiar with the 100-year, 500-year. And so those all occur within the 100-year
Correct.
floodplains.
Yeah, those are just your
And
two categories. Um, Primarily, you're going to run into A type flood zones, unless you're looking at beachfront property.
got
Um,
it.
and so, yeah, those are your 100-year flood zones. And so the interesting thing is that these maps are created, with lots of different data points that are being aggregated together. These studies are done by the counties, and certain counties have bigger budgets, right? Bigger budgets equate to more detail. So you can kind of get where I'm going, right? The flood zones aren't perfect.
Yeah.
And
Well, that kind of goes to the point. Like I've spoken with a number of sellers of properties that have said, their property, half of it's in a 100-year floodplain. And they're like, I know it's in a floodplain, but it's never flooded here. It's never happened. It's not gonna happen. And I still in the back of my mind, I'm like, I don't know if I can handle that risk. And I see that 100-year, and I'm like, and again, the 100-year floodplain, that means it has a high likelihood, or is it 100% likelihood of flooding within 100 years, or is that's the general understanding? And then the 500 years that it has 100% chance of flooding within 500 years. Is that why they go by years
yeah, I mean, it's again, those terms really don't mean much anymore
anymore? Okay.
in the way that they're used. But 100 years, a 1% chance. The 500 years, a 0.02%, if I'm not mistaken. So, those percentages really don't speak
Oh,
to likelihood because there's some parts of the country that flood every year.
right.
Depending on certain storm variables or whatever it might be. So yeah, it's definitely something that, to your point, it's got to be in your criteria. It's definitely something you have to look at in every deal so that you don't miss that as an oversight, because we get calls 2 weeks before closings all the time. Oh my gosh, I just found out I have to get flood insurance.
Yeah.
And you're thinking, how did the real estate broker miss it? How the investor miss it? How the insurance broker, like how did all these different people that are involved? So that's why education is such a big point for us. And that's why we network so heavily with all these ancillary, you know, people that are involved in the transaction so that everybody thinks about checking the flood zone and then hopefully calling us to see if we can help.
Yeah. Makes sense. And you were saying earlier that a lot of times the flood zones are not updated because for whatever reason, the property was built before the flood zones came into be or whatever. And so you don't necessarily, if it's in a 100-year or a 500-year, it doesn't necessarily mean that it will be flooding.
Right. I mean, you have to question all these things, right? It's like why people challenge their property taxes every year. So the flood zone is no different. You should question it as just pure due diligence, because there are programs, right, where private engineering firms like us, we can work with FEMA, we can get buildings taken out of the flood zones. So we
Hmm.
show individual characteristics of those properties to say, look, these set of buildings are actually outside of your criteria for the flood zone for this area, basically proving they're at a lower risk than what the flood map is showing.
Got it.
And when that's approved, they're now part of the X zone, and all their lender requirements are then removed.
Interesting. Okay. So
So
that
flood
kind of
insurance
leads
is
into
optional.
the next question that I had is, you guys help people save money by reducing their flood insurance requirement or eliminating it. So how does that process work?
Yeah, so we put properties through a very rigorous review process. Have engineers on staff that review all these properties. There's no cost. That's the best part. You can use our team for any property you'd like us to look at, because we know statistically we're going to find a solution about half the time.
Hmm. Oh,
Um,
wow. Half the time. That's crazy.
Now, it's not just flood zones, right? So we have a very robust set of solutions. it's two parts. One is, can the property be taken out of the flood zone? The second part is, can we improve the rating of the flood policy so that the premium dollar value is then reduced? So it's a combination of solutions that all lead to a dollar savings one way or another.
Yeah.
So yeah, if we identify, in the engineering, because it's all very objective, right? There's no creativity to much of this. There's obviously a
That's how
lot
we
of
like it.
nuance,
If it's
experience.
objective, then yeah.
Well, I mean,
That's
the numbers are the numbers at the end of the day. And so we do a flood zone analysis, we do a building analysis, and if all the engineering works out to the criteria that we need it to, we can go to FEMA and say, hey, actually, these 10 buildings, here's the data to prove it. And then they'll issue a letter of map amendment, or LOMA, as some people have heard it referred.
Okay.
That's a federal document. All the federal banks, recognize that to update their flood zone determination, removing the flood insurance requirement. Now, you can obviously still buy it, right? This just means that you're removing the lender as a dictator of terms.
Yeah.
You can do whatever you want at that point as an owner.
Well, I mean, so I buy self-storage facilities, and for self-storage facilities, because a flood isn't really going to damage a self-storage facility. You have to, notify the tenants, but it's not really going to damage it. It's just metal buildings. And so having a flood insurance, I would prefer not to have flood insurance because it's not going to hurt anything. It might, have some rust happen, or I don't actually have never gone through a flood with the self-storage, but it would be good to be able to reduce it or eliminate it for the facilities that I buy. So that's interesting to know. The big thing that, especially when it comes to insurance, understanding the timeline, as you mentioned in closing, how long does this take? Because a lot of times you get into it, you're doing all the things, you're going out there, you're flying to properties, you're doing your due diligence, you're getting your surveys done, all the different tasks that needs to be done. And sometimes things fall through your mind and then you realize, shit, I need to do the flood insurance. So how long should somebody be interacting with a company like yours in order to get the help that they need to reduce their insurance requirements?
I like when people reach out when they're just putting an LOI in place.
Wow.
The
Okay.
early stage, the more time, the better. Someone gets a signed LOI, they get into due diligence, we can get the documents we need from the seller typically at that point, or if they want, if there's data missing, they want to get our team on site. We've got a project right now going on in Texas. They are 100% hard on the deal. They're still within their due diligence timeline, but they're going to fly our team out, get all the data we need for our analysis. And then, for the flood zone piece, it can be as fast as next day.
Oh, okay.
We just had a case, like they have a closing on Friday. Today's Wednesday. We got everything finalized for the project Monday late in the day. My team got it into FEMA yesterday. Just got the approval right before this meeting. So they're not always that quick, but there are situations where things can move very fast. We have some expedited processing that we have access to with FEMA directly. But average case, probably about 6 weeks.
6 weeks. Okay. 6 weeks. See, that's good to know because a lot can happen in 6 weeks when you're in a deal. So, perfect. All right. Well, hey, I just took a peek at the clock. It looks like we are running it down, but before we move on, I do want to talk about your LP experience, your passive, your investing as a limited partner in other people's deals. You mentioned 2,500 units you've invested in. How's the experience been, and what type of asset have you chosen as your bread and butter?
Yeah, mine have all been multifamily. I spread those units across several different operators. This was my first round. I guess it was spread over a couple of years, but first round of investing in multifamily. So I wanted to try to, diversify the risk across different operating groups, all people that I knew personally beforehand, from relationships that had built through national flood experts. But some of them were funds where they went and bought, 3-4 properties all in one acquisition cycle. Some were individual assets, a little bit of a spread between some class A and some class B. So it was a little bit of value add, a little bit of, trying to have something that should be, a steady Eddie type property. And then all the interest rate stuff happened, right? So it's just bad luck and timing for me first getting in. So I learned quickly what a rate cap was and how many of my properties didn't have them.
Yeah.
Something that I just missed really lack of experience in my own due diligence.
Yeah.
We've had several capital calls, which have not been fun. But like I was saying before, so far everything, knock on wood, is still head above water. Working on some neutral refinances for a couple deals. And, we've got some other refinances that should be, kind of working toward the end of the year. So in reality, all these 5-year projects became 7 and 8-year projects. So it's a delayed distributions, delayed exits, but it's an education, right? That's all we can do is just be smarter than we were the day before.
Well, and yeah, that's a really important lesson to learn when you're investing in other people's deals. For everybody out there who hasn't invested in a deal yet, a rate cap is basically when you're paying the bank to ensure that your interest rate on your loan does not go up. Because a lot of times, especially with the bigger deals, your rate becomes variable at a certain point, at a certain number of years after the acquisition, and so people will buy a rate cap to make sure that they aren't subject to things like interest rates going up to 8% when they were 3% a couple of years ago. So really, when you're talking with your operators, make sure you understand their debt structure and what kind of lending they're getting. If they don't have a rate cap, then interest rates might go up, and if they don't have that already baked into their underwriting, they might be screwed. And that's what's happening to a lot of guys out there. Is interest rates gone up, which affected their loans. The loan payments went up, took out the cash flow, and now they're not getting distributions.
Mm-hmm.
So it's a good lesson. Something that I hope none of you have to learn the hard way, but it's something that you can definitely understand at the beginning, understanding what kind of debt that they're getting. So good lesson that you learned. And I'm going to take that opportunity to push us into the quick question round. Are you ready?
Sure.
All right. Starts with education. Could be books, could be movies, could be whatever. I just need 2 recommendations, one for general life wisdom and then one for real estate.
I think the 10X rule, even if you're not a Grant Cardone fan, we've worked with this company personally, so they're a unique breed of energy. So even if you're not a fan of him personally, that is it's a very good book. Expands your mind pretty dramatically. Real estate wise, I think podcasts are the best. I don't know that I have a book there, but like finding someone like you that you trust, there's lots of them out there, but I can't reiterate that point enough. My early days of learning about real estate were just listening to people in the car, hearing how other people spoke and pick up a vocabulary word like rate cap, just here and there. So I think that's powerful.
There you go. All right. Next question is for your younger self. Let's go back to the DJ who was just getting started. I think you said 8 years ago. Go back to him, look him in the eye, give him one piece of advice moving forward.
Well, I think that I would have held on to all those early days properties that I had. I didn't want to deal with the headaches and some of the costs, but knowing what I know now about how easy it is to really find capital if you just look and partner with people, I mean, it could have really taken advantage of some huge appreciation on a couple assets.
Yep. Yeah, time really does heal all wounds in real estate. So long as the population goes up, that's really the main driver in real estate is population growth. If the United States continues to grow in population, then time definitely heals all wounds in real estate. So just hold on. If you're in a deal that didn't go quite the way you expected it, a lot of times, if you just hold on for a little bit longer, the appreciation and the increase in rents will solve the problem that you ran into. It's not something that you want to go for. Definitely underwrite for a home run, but time definitely heals wounds. All right, next question is about the U.S. It's a big place. There's a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
I really like Dallas. It's a market that I've got several investments in. Dallas has so many, large corporations that are coming into that area. Lots of new headquarters. So I think the population growth, to your point, is going to continue to be pretty steady. So I'm very optimistic about the Dallas Metroplex.
Awesome. Me too. I have 2 self-storage facilities down there, and I'm looking for more. I love Dallas. So um, good recommendation. And that leads us to the last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. It's a two-parter. Where can they find you? And then what can they expect when they reach out?
Sure. Yeah, you can reach out to me at dj@nationalfloodexperts.com. Always welcome to find me on LinkedIn as well. Pretty responsive and active there. What you can expect is education, right? I'll be glad to answer questions. If I can't, I'll connect you with, one of my team if I'm not available. And again, our review process, right? We're happy to look at any deal, provide some insight, and then give some guidance if to what the next steps, could be. Either the hard truth of the situation, you'll get that very transparently, or some options to help improve the scenario.
Perfect. I will put that link in the show notes. So if you guys want to reach out, just click a little more in the description. It'll pull down that full description in there. You can find DJ's link. All right, man, that wraps it up. Thank you very much for hopping on the show.
100%. Thank you.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review on anything you're listening to this on. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.